Singapore's core inflation dropped to 2.1% year-on-year in October 2024, marking its lowest level since December 2021. This represents a significant decrease from September's 2.8%, largely attributed to moderated inflation across services, electricity and gas, and retail goods. The Monetary Authority of Singapore and Ministry of Trade and Industry announced on 25 November. Headline inflation, which includes accommodation and private transport, also eased from 2% in September to 1.4% in October. On a month-on-month basis, core inflation decreased by 0.3% in October. The decline was driven by slower accommodation inflation and a sharper fall in private transport costs. Services inflation fell sharply to 2.3% in October from 3.3% in September, due to smaller increases in holiday expenses and healthcare service costs. Electricity and gas inflation dropped to 2.5%, down from 6.3%, as price hikes for these utilities slowed. Retail and other goods inflation saw a decline from 0.8% in September to just 0.1% in October. This was primarily due to larger decreases in clothing and footwear prices, alongside falling costs for medicines and health products. Food inflation, however, remained steady at 2.6%, with prices of non-cooked food and food services rising at similar rates across September and October. Accommodation inflation edged down to 2.5%, a slight reduction from 2.7% in September due to smaller increases in rental prices. Private transport costs fell marginally faster, from -2.4% in September to -2.5% in October, as car prices continued to decline. MAS and MTI expect core inflation to remain around 2% through the end of 2024. For the full year, core inflation is projected to average between 2.5 and 3%, before moderating further to 1.5 to 2.5% in 2025. Overall inflation is forecast to average 2.5% in 2024 and ease further to a range of 1.5 to 2.5% the following year. Although global energy prices have been volatile in recent weeks, they remain lower than levels seen a year ago, MAS and MTI noted. A stronger Singapore dollar and easing global inflation trends are also expected to reduce imported price pressures. Domestically, slower unit, labor cost growth and improved productivity are likely to further ease inflation in the coming year. Services inflation, which has already shown signs of slowing, is expected to decline further in 2024. Accommodation inflation is also forecast to soften next year, helping to offset an anticipated rise in private transport costs, driven by robust demand for cars. MAS and MTI highlighted a balanced outlook for inflation risks. Stronger than expected labor market conditions could slow the easing of labor cost growth, potentially sustaining inflationary pressures. Conversely, heightened geopolitical tensions could lead to increased commodity prices, raising imported costs. On the other hand, a significant downturn in the global economy could result in greater easing of cost pressures, pushing inflation lower than anticipated.